Good evening, all. Ira Epstein with your Spider ETF stock market wrap-up, and this wrap-up is for the evening of Monday, and we are sitting here now at the 17th of October, 2022. Well, what a day. Whoa! These markets ran, and boy, did they run. So, we had what? We get 1,000-point or a 900-point rally, a 500-point drop, then another rally. We're going up and down like a yo-yo right here, and volatility has picked up. I went back and looked at the beginning of the month. We're typically getting about a 2.5 to 2.75% swing up and down on the extreme days of the month this month so far. So you can't just say this is one day. We've had quite a few of them. Bear markets do that. They get very large moves in them, contra-trend moves, because the public can't wait to buy. Everybody wants to be the first person on the block to deploy their money. I get it. Is the time right? I don't think so, but I could be so wrong on this. I mean, I don't get why people are being this aggressive. I mean, do you really think the Fed's not going ahead with the 75 basis point hike in November? Do you think that you're going to get a CPI reading that gets the Fed to not be at least a 50 basis point hike in December? Do you think that you're going to keep getting CPI to get on a trajectory down so that December is the last rate hike? I don't think so. Could it be early 2023? It could. But all this counts on one thing: inflation falling. I haven't seen inflation fall yet. Now, there are signs that it's happening. I keep up with real estate in Miami for a reason. My wife and I had a home there in Chicago for a very long time. We lived on the beach, actually. And if we went back, we'd go into Miami. So I keep up with the rents at this point in my life. What do I need to own another place for? So I look at it all the time. They're falling. Okay? I get an article, 100 places for sale and blah, blah. It's a very nice, well done piece. And that always marks off for me each week what's going on. I'm seeing drops, 10%, 12%, 6% in rental prices. Now, they were pretty darn inflated. I mean, you're talking big numbers for places down there, and that's great. But I just keep my eye on it. Okay, so that's one element. You cannot tell me that energy prices have really fallen apart when you go into TLT and some of the other numbers that we're going to look at here. Interest rates, they're still climbing, okay? I just don't see what everybody's seeing. But I'm slow to the game, maybe. Maybe that's what's wrong with me. I don't know. One of the things that we used to cover here was PAVE. And I do see government programs working. I mean, is there a major city now that doesn't have that money that was deployed by the Biden administration not at work? I see it in Chicago all over the place. So that is a good program that took place. I want to finish up today on Tesla. Then tomorrow I'll pick another stock. If you have an idea of one you'd like me to cover, and let me know. I was watching Kramer with an interesting one, Bolero. You might want to look at it, about bowling. And how this group has pretty much cornered the market, or doing so. Could be an interesting one to look at. All right. In any case, you had a huge down day the day before in Tesla. Let's get to that on Friday. You do agree with me on that. Look at that. So the market was down 7.55%. Today, the market is up 7.01%. So it hasn't gone anywhere. Yet, the press is on fire. Tesla's doing phenomenal. There is something so wrong with me that I know I need help. Does this look phenomenal to you? If you want to find bull stories, you can always find bull stories. That's not what that is at this point. But if you take out the highs of Friday, tomorrow, then until you retake out this low, that could be interesting. It's part of what I've done my research on my outside day course that I'm still working on. Take that out, you could be going to the next major average. This blue line, I did this for you way back here. I started connecting a zone. That's all you've done. You haven't done a lot different than that in stock indices. You went down to the June lows and you're bouncing in that area. This does not mean you've bottomed out in the market. So I just want to be the voice of sanity here. If you can take out this 226.26 level, wherever the 18-day average comes in, I can make an argument that the market might want to go there. From here, that could be another 7-8%. 10% of 219 is $21. Add that to it, and you're right there. I know it sounds tricky, right? It's so simple of math. Do it all in your head, and you get an idea where you're at. And the market's moving 7%. It did it on Friday. It did it again today, okay? So you're getting these type of moves. What about Bollinger Bands? Well, you've left running at them. You now have a flattened area. If you take out 206.22, you open the door for wherever the Bollinger Band bottom was one more time. That's if you do it. And I'm inclined to still be bearish. Why? You do understand when you get the slow stochastic to lock in and you're in a downtrend, you're looking to sell rallies, not buy breaks. Get the red line to close over 21, and I think the market will go up to the 18-day average. Don't, and I think you have to be a seller on these rallies still, looking for lower prices to come into the market. Netflix has made its trip. It's gone from its washout of the lower band and the 100-day average. Oh boy, is there something wrong with me? Do I not tell you over and over? I don't care if it's on the upside or downside. You put a Bollinger Band with the 100 or 200-day average, it is the spot you want to come out. It's where the big money says, okay, I'm at a number that we've got to come out at. What are the odds of staying under the black lines? 5% of the time. You get down there, you're oversold, you're not embedded. Bingo. Did I know you'd come at that top? No, it doesn't matter though. You're supposed to be out there. You're not supposed to be a buyer there looking for that market to go up. Let the other sucker do it. Why didn't the guy then buy it over here? Then he's washed himself out here. Why didn't he buy it under here looking for the rally? Then it falls down on him. I'm not saying that couldn't be a spot where people buy it and they hold it. That is a whole different thing, but I'm a trader. I am not somebody that's doing an investment. For investing, go elsewhere. For a trade show, this is what this is about. You have gone up to an area that you should now encounter resistance. Why is Netflix moving? Because they're going to announce their subscription-based, their earnings now. What else? They have the new product coming out. They've got new products too. They're going into the gaming. They've got ad-based subscription, I think $6.95. They're going to get some traction off of those. People will pay that type of dollar. That's my prediction. On Apple, does this look to you like you've turned the corner? No. What it looks to me is like you got oversold, you hit the Bollinger Band, you walk away. The same identical play. Disney, same thing. All you did is rally into the resistance again at the 18-day average. Now, bear with me. Each time you've gotten up here, you have failed. Why am I, as a trader, looking to be a buyer there when each time it's failed? Number two, the pattern's still down. Now, let me give you the kicker. If the market can clear 98.09 tomorrow, as long as you don't get back under today's low or whatever the low is prior to that being hit, you do open the door to get to the Bollinger Band, the black dashed line. Now, here's what's been going on with that number. If we go back on it, this is today, 104.04. Day before, 105.97, so $1.90, and 108.95. I think you'd agree with me. It's moving about $1.80 a day, $1.90. So if we take that from that, we're going to be in the 102 area. So if you're buying at 98, you're hoping to pick up about $4. That's one of the techniques that I use if I want to see about where the market's going. Here's your 102 for today. What if it loses $2 more tomorrow? When the market opens, you're going to be at 102. So you're trying to buy the market at 98.09 for that quick move and risking it all the way back down there, or to a minimum what under that low is. That's your call, but that's what I'm saying. XLF, again, what number did you go to? And in looking back at it, that was it. Okay, not embedded, oversold, hits the Bollinger Band, the shorts come out. This is what they call their gravy. Similar to the chart we just looked at, look at the resistance you're now facing. It's right above you, these two big numbers. What did I just say? If you get up to a Bollinger Band and a major moving average, which the 100 is, that's a pretty big resistance number. So anybody that's long as a trader, I think is coming out at those numbers. When we look at the industrials, it just missed hitting the Bollinger Band, but just missed, it's like saying, I got 60 home runs this year and I didn't break the record, right? You want to break the record. It didn't hit it. So you left your downtrend when you took out this high 2 days ago. Could you get to the Bollinger Band? Yeah, but you got these layers of resistance. Is it trending to the upside? No. Could it? Yes. If you were to take out 97.40, which is Friday's high, you'd have a pattern of higher lows, higher highs. But I have immediate resistance at the upper band, which is what, the 88.26 area, not too far from where you're at. In the semiconductors, oversold market that hit the Bollinger Band here the first time. That's where I think the pros came out. And since then, it's been noise. It hasn't gone anywhere. In the home builders, I'm watching today the rally in the stock market. And early on, you had the futures markets in the 10-year notes, the 30, the 5, they all rallied. Nice rally in the 10-year. At about, I wrote the time down, I think it was 150 or something. The market starts reversing big, ends up making new lows on the day. This is a big move. This is like a 1.5 move in the futures. It's big, going the other way. When futures go down, real rates are going up. Keep your eye on that. Today I was watching the 2-10-year spread. It was 51 points. I didn't pay attention to where it finished, but looking at what the 10 did and gaining back yield, I don't think it closed out at that 51 points that it was intraday. And that's one of the best gains we've had recently at 51. In the energy sector, are we going to embed here? So both numbers are over 80. Both numbers on Friday were over 80. Both numbers on Thursday were over 80. You have an embedded reading. So this tells me that the pros will buy breaks as long as the red line isn't under 80. If it flashes under 80, they won't buy. So until that occurs, that's called the K line. It's at 82.29. They're going to buy breaks looking for the market to get up to 86.51. GLD, does this look to you friendly? Now, the only thing it's got going for it is it's oversold. It's a bear trend. The resistance, the 18-day average, in an overall sideways market. We've been here, done this story. You got down here, you rally towards the upper band, you're just going back and forth. Are you making big moves? No, you're just doing one of these seesaws back and forth. Silver, SLV, I was telling my traders today, cover shorts. Time to walk away. You're oversold, you're not plunging. They went short this market very nicely if they followed. And I'm talking what I do in my morning subscriber video. And yes, I have the tapes of everything I tell you for government reasons. And by the way, I manage nobody's money. It's just what I'm putting out and they decide what they want to do. Do I have losing trades? Of course I do. Okay, nobody walks on water. But tight monetary controls. In fact, I had a losing trade today in the Swiss franc, of all things. I sold a big rally. At the end of the day, I was wrong. 20 points, I'll take that all day wrong. $200 plus error. Not error, loss. I call it loss and error, obviously. I'm trying to win all the time. But definitely wrong. Lower highs, lower lows. Market's giving you, if you can rally back here, I'll take another look at it, but not when it's oversold. It either embeds or it's not. It's been reluctant to embed recently each time it's made a run down there. Why not just come out and call it a day? We're all waiting to see what China's going to do with its property market. We don't know. Now, they did open up the conference on Sunday. President Xi is staying with his COVID policy. It works so well. The National Statistics Office refuses without reason. We're supposed to release GDP a week ago, last week. They put out another announcement today. They don't know when they're going to release it. Let me tell you why it's not being released. It's nobody's secret. While this Congress goes on, you will not do anything that makes this president look bad. He's going for a third term. He's an iron hand. He is the vision of China. And even if his policies don't work, they work. I had a mother that used to tell me, even if she's wrong, she's right. I remember growing up like that. And you learn that that's the authority figure. Okay, she is wrong, but because she's my mom, she's right. And, well, I guess that's what he is to the Chinese people. But yes, they're not releasing their GDP. Most of us think GDP will never hit their 5% target this year, closer to 3.5%. And he probably doesn't want the embarrassment. I'm not trying to embarrass him either, by the way. Their country, their ruler, their way of doing business, I respect it. I mean that from the bottom of my heart. They have the right to do what they want to do. That's what America's about. Everybody has a right, other than hurting people, other than things of that nature. But how you run your government, you want to be a communist regime, you want to be whatever Iran's going to be, you want to be whatever, I don't care. Americans shouldn't go in and conquer countries. It's not what we're about. I hope it's not what we're about. TLT, I'm bearish as can be, but this is all the iShares, the interest rates. How come the stock market's going up? Do you really think the stock market can go up? Putting rates at 4.5%, 5.25% is your neutral rate. If you think so, buy the stocks. I don't think that's going to be the case. UUP, the dollar, look at how it slipped back. You saw this coming up here when you lost the embedded reading. That's why these Bollinger Bands are so important. It told you when you lost it right here, you couldn't be long anymore. You still can't be long. Can you be short? There's no sell signal. You're sort of just wandering through space. In FXE, lower low, higher high. No trend again. Nothing to do in that. So you put it all together. You try to come up with game plans and reasons. Now, you had a big update today in the stock market. Often, Mondays, a big move up or down. You get a reversal on a Tuesday. Does it always work? Of course it doesn't always work. I don't know anything that always works. Does it have a high probability after a big day on a Monday? It does. Does it have to work? No, but you generally will see the selling coming into the market. It may be an update because you're up 200 points in, I think, the Dow tonight already. You know, you're getting these rallies. Do I think they'll hold? Well, the odds don't favor it. That's what I'm trying to show. Pulling back. Am I bearish right here? No, I'm sidelined. Am I telling my clients go short, go long in the stock indices? I swear to you, the answer is no. I'm waiting for my signals. That's what charting is all about. If you want to learn how to work with these Bollinger Bands, which will give you an edge over your friends, I promise you it's a whole different way of looking at them. And you're going to probably incorporate it into your trading model once you see the logic of it. Take a look at this and learn. It's 13 chapters on how you learn to do this. It's pretty simple. It's all video. We give you the charting software, the data, and then 2 weeks where you see me in the ETFs and the futures markets, all included, talking about this in real time as the markets are moving on as I'm doing my recordings. I think you'll learn a lot. I'm Ira. You have a good day. I'll see you tomorrow. We won't be covering Tesla. We'll move on to something else. Take care. Welcome. I'm Ira Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time. And on a chart, it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all three of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, If you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein, on the road to your education.